Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 27th, 2025, and we're diving into the third quarter earnings report of Bank of Marin Bancorp. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Bank of Marin's latest financial performance.
Let's get started with an overview of the company's performance this quarter. Revenue and profitability overview. Bank of Marin Bancorp reported a net income of $7.5 million for the third quarter of 2025, a significant turnaround from a net loss in the previous quarter. John, what are the key drivers behind this performance?
The key drivers include a substantial improvement in net interest margin, which increased to 3.08% from 2.93% in the previous quarter. This was largely due to the effects of securities repositioning. Additionally, the bank's net income grew by 61.4% year-over-year on a non-GAAP basis, reflecting strong operational efficiencies and cost management.
And how did the earnings per share compare to analyst expectations?
Bank of Marin reported an adjusted EPS of 47 cents, which exceeded the analyst forecast of 42 cents. This beat expectations and highlights the bank's effective financial strategies this quarter.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the future outlook. The bank's efficiency ratio improved significantly. What does this indicate?
The improvement in the efficiency ratio to 68.94% from over 200% last quarter indicates that the bank has effectively managed its expenses relative to its income. This is a positive sign of operational efficiency. Additionally, the bank saw a $16.7 million increase in loans and a 4.2% increase in deposits, which are strong indicators of growth.
And what are the expectations for the coming quarters?
According to CEO Tim Myers, the bank expects continued loan growth, supported by a healthy pipeline and disciplined underwriting criteria. This suggests a positive outlook for the remainder of the year.
Credit quality and risk management. Credit quality is always a concern for banks. How did Bank of Marin perform in this area?
The bank reported a decrease in non-accrual loans to 1.51% of total loans, down from 1.57% last quarter. Classified loans also decreased to 2.36% of total loans. Importantly, there was no provision for credit losses this quarter, indicating strong credit quality and effective risk management.
And what did the CFO have to say about future strategies?
CFO Dave Bonaccorso mentioned that the bank is exploring additional repositioning activities to improve earnings and support long-term growth. This proactive approach to managing the balance sheet is encouraging for future performance.
Shareholder returns and capital management. Let's discuss shareholder returns and capital management. What actions did the bank take this quarter?
The bank repurchased 50,000 shares at an average price below tangible book value, which is a strategic move to enhance shareholder value. Additionally, they declared a cash dividend of 25 cents per share, marking the 82nd consecutive quarterly dividend. The tangible book value per share increased to $22.92, reflecting strong capital management.
How do the capital ratios look?
The bank's capital ratios remain above well-capitalized regulatory thresholds, which is a positive indicator of financial stability and resilience.